Thursday, the 26th of July 2018, 9:39 London. Alliance News. Stocks in London were higher on Thursday as investors digested a heaping plate of earnings from blue-chip companies such as Royal Dutch Shell, Diageo, British American Tobacco and AstraZeneca, while from elsewhere came results from Facebook, Nestlé and Daimler, among many others. Focus in the international economic calendar is on the European Central Bank's latest policy announcement at 12:45 BST with a press conference with President Mario Draghi at 13:30 BST. No change in monetary policy is expected, and the meeting could be rather uneventful given the unexpected announcement in June regarding the conclusion of QE and the dovish change in forward guidance that accompanied it. A reiteration of the dovish message could in fact send the euro right back towards $1.17, said Jasper Lawler, head of research at London Capital Group. The FTSE 100 was up 0.2%, or 12.17 points, at 7,670.43 early Thursday. The mid-cap FTSE 250 index was up 0.1%, or 28.24 points, at 20,781.84. The AIM All-Share Index was flat at 1,100.95. The CBOE UK 100 was up 0.2% at 13,000.92. The CBOE UK 250 was up 0.1% at 18,913.43, while the CBOE UK Small Companies was also 0.1% higher at 12,413.18. In mainland Europe early Thursday, the CAC 40 in Paris was up 0.6%, while the DAX 30 in Frankfurt surged 1.2%. Germany's blue-chip index was outperforming its European counterparts as the export-heavy economy was buoyed by Wednesday's meeting between European Commission President Jean-Claude Juncker and U.S. President Donald Trump. Trump said the two sides would work together toward zero tariffs, zero non-tariff barriers and zero subsidies on non-auto industrial goods. We will also work to reduce barriers and increase trade in services, chemicals, pharmaceuticals, medical products, as well as soybeans, he said in the White House Rose Garden. The US and EU set aside trade tensions during talks, with a working group of our closest advisors, to begin work immediately to achieve their shared goals, according to a joint statement. This of course is on the understanding that as long as we are negotiating, unless one party would stop the negotiations, we hold off further tariffs and we reassess existing tariffs on steel and aluminum, Juncker said. Smith. The medical devices maker proposed an interim dividend of 14 cents, up from 12.3 cents last year. In second place was British American Tobacco, 3.6% higher after the firm said half-year profit grew 31% to £3.97 billion British pounds from £3.03 billion British pounds a year prior as revenue rose 57% to £11.64 billion British pounds. Cigarette volumes jumped 10% to 345.0 billion sticks in the period. AstraZeneca climbed 1.6% despite a fall in interim profit. Total revenue for the first half of the year fell 1% at actual exchange rates, down 5% at constant currencies, to $10.33 billion United States dollars. Product sales rose 2% at actual exchange rates to $10.02 billion United States dollars, but externalization revenue, which includes royalties and milestone payments, was down 53% to $318 million United States dollars. Cost of sales rose 16% to $2.15 billion United States dollars, with pre-tax profit falling 27% to $786 million United States dollars from $1.07 billion United States dollars last year. Oncology sales grew 42% in the half to $2.66 billion United States dollars, with respiratory up 6% to $2.40 billion United States dollars and new cardiovascular, renal and metabolism up 12% to $1.87 billion United States dollars. All in all, this is a relatively benign update from Astra. Key growth drivers are performing well and a return to sales growth is in sight. Product ramp-ups will likely drive continued elevated SG. At the bottom of the blue-chip index was contract caterer Compass, down 2.7%. The company said third-quarter organic revenue grew by 5.7%, driven by strong net new business in North America, and acceleration in Europe and good progress in rest of world. Whilst the margin for the 9 months to June 30 was slightly lower than last year, Compass said it remains on track to deliver modest margin progression for the full year. Royal Dutch Shell A shares were down 1.2% and B shares 1.7% lower despite a sharp rise in second-quarter earnings and a significant share buyback. Current cost of supplies earnings attributable to shareholders for the 3 months to June 30 rose sharply to $5.23 billion United States dollars from just $1.92 billion United States dollars last year. The oil major announced a second-quarter dividend of 47 United States cents per share, in line with last year. In addition to this payout, Shell launched a share buyback of at least 25 billion United States dollars for the period 2018 to 2022. For the first tranche of this, Shell is to purchase shares up to a maximum consideration of 2 billion United States dollars over a period of 3 months. On the whole, this an impressive update which should serve to confirm the Shell's image as a core portfolio constituent. Despite a slightly muted reaction in early trade given broader market weakness, the general view of the shares as a strong buy is most likely to remain intact, said Richard Hunter, head of markets at Interactive Investor. Distiller and Guinness brewer Diageo was down 1.5%. The company, which owns Smirnoff Vodka and Captain Morgan Rum, said sales for the financial year ended June 30 rose to £18.43 billion from £18.11 billion last year, as pre-tax profit climbed to £3.74 billion from £3.56 billion. The company recommended a final dividend increase of 5%, bringing its full-year dividend to 65.3p. Our financial performance expectations are unchanged, and we expect to continue to invest in the business to deliver our midterm guidance of consistent mid-single-digit organic net sales growth and 175 bps of organic operating margin expansion for the 3 years ending the 30th of June 2019, said Diageo in a statement. The company also said it has approved a new share buyback program to return up to £2 billion during the year ahead. In the FTSE 250, INTU Properties was down 4.9% after it reporting a fall in net asset value to 362p at June 30 from 411p at the end of 2017. Net rental income also dropped modestly to £223.1 million from £226.2 million the year prior. INTU proposed a flat interim dividend per share at 4.6p. In Asia on Thursday, the Japanese Nikkei 225 index closed down 0.1%. In China, the Shanghai Composite ended down 0.7%, while the Hang Seng Index in Hong Kong is down 0.6%. By Lucy Hemming at AllianceNews.com. Copyright 2018 Alliance News Limited. All rights reserved.